Hey guys, Steve here with the free trade for Tuesday, July 22nd, 2014. Basically gonna do as we always do, take a quick look at the market. Today we're gonna actually change it up a little bit. We're gonna actually look at one other futures, or actually both other futures contracts, the Nasdaq and the Dow, just to see if we can get an idea of which way maybe the market wants to go. I thought we were gonna have the breakout today that we've been waiting for, but it doesn't look like the end of the day cooperated with that rationale. So we are looking at this trend line has really been confirmed. Now it's been broken, moving sideways, and just as Friday tested the bottom of the box, really bounced off the bottom. It looks like these topping tails here, and including today, has really defined the top of the box. So I'm fairly confident in the consolidation area that we have shown, and I would expect a break either above or below to lead to a couple day reversal or a couple day rally. But I do like the fact, I think as I discussed yesterday, that we have consolidated for so long at these prices. So if we do get a breakout above this level, I would feel fairly confident that it would continue. The other one I wanted to look at real quick, we'll take a look at the Nasdaq 100 futures. Similar to the S&P futures, we have a nice strong trend moving higher, but the one difference that I noticed in this when I was looking at it today was this actually broke out today. Now read into that what you will, but the fact is, to me, the Nasdaq is showing signs of strength compared to the S&P 500. Now, we do have some positions, namely Apple, which actually reported today in our model portfolio on the strategy session side, but that are tech stocks. So those are obviously outperforming the S&P. But with that said, maybe this is an indication of how the S&P is going to resolve. Unfortunately, though, the Dow is similar to the S&P, and that too is consolidating. So, call it what you will. Maybe it's the summer months. Maybe it's, people really don't have conviction. Maybe they're just kind of doing the same as us and just waiting for the markets to move in a direction. But, for right now, the Dow and the S&P are consolidating, and the Nasdaq actually broke out today from its consolidation. So let's take a quick look at our trade in Archer Daniels Midland. So basically what we've had here, nice long consolidation, the breakout. I did check, we identified this on the 7th, which was, I believe, a Monday, as a entry candidate. We basically went in, bought the open the next morning, and made another consolidation area, and moved higher out of that into now this consolidation area that we're in now. And again, you could see today that it actually did close above that consolidation area, but we had these topping tails here on the 14th and again today on the 22nd, showing that maybe this is at a resistance, maybe this is kind of getting tired, whatever. But what we're actually going to do for the free trade idea, just to keep things fresh and to show as many stocks as we can. I'm trying not to get stuck in a stock for 3-4 weeks at a time that we discuss the same thing, because after a while it becomes repetitive. We're actually going to take and raise our stop to this 47.32 level. So if we get a close below 47.32, we will exit the trade. It may be hopefully it'll be for a profit, since we entered here at 46.50. But for right now, our stop is going to be 47.32, so we can kind of get on to the next trade. And we're going to trade the free trade as an aggressive style, and the strategy sessions will be more of the longer term look to make as a portfolio, I would say position style trading. But for right now, like I said, we're going to be aggressive in the Archer Daniels Midland trade, especially due to the fact that I see this trend line and this upper channel. So we're going to raise our stop to 47.32. With that said, guys, if you haven't hit the like button below, please do so. Subscribe to the channel. Follow me on Twitter and StockTwits. And make sure you visit the blog. So we'll see you tomorrow.